My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Chances are if you've been in and around real estate in the US of A for any time, you've heard of 1031 exchanges. You know, that's something that a lot of people want to take advantage of. There's pros and cons, there's right and wrong ways to do it. And today our special guest is Paul Frank. He is a real estate investor. He's a developer. He's also a broker. He's been in the business for 40 years. Going from dirt to disposition has been what he's been focusing on for a long time. But Paul was telling me a little bit before we pressed go here that one of his specialties is helping people to 1031 exchange from multifamily properties into single tenant properties. We're going to kind of talk a little bit about that and find out what the big benefits are. So Paul, welcome to the show. Great to have you.
Wonderful to be here. Appreciate you.
All right. So Paul, before we jump into the topic of the day, maybe zoom out 40,000 feet. Tell us a little bit more about who you are and what you do as of September of 2025. What are you up to?
Yeah, I've been, short version, I've been a commercial real estate developer and broker for about 40 years. Over my career, I've developed and brokered hundreds of millions of square feet of real estate, covering all property types throughout the United States and some international work. So jack of all trades, master of none, if you will.
All right. So we were talking before we started recording that something that you've done a lot of as well is helping people with these 1031 exchanges. So before we get too much into the jargon, maybe explain to us, big broad strokes, what is a 1031 exchange? And then we'll talk a little bit more about how most people do it and how you recommend they do it instead.
Yeah, absolutely. And just as a qualifier, I am not what's called a QI or a qualified intermediary. My experience with 1031 exchanges goes back decades as a developer, investor, and broker, as you said. But what that vehicle allows for is a tax deferred movement by like-kind property, which is oftentimes misunderstood. Any investment property for any investment property, and we can facilitate that without a tax event occurring.
All right, so let me kind of dumb that down. You've got a property, you've held on to it for a while, you want to sell it, you don't want to pay taxes, you don't want to pay capital gains. So what you can do is you can sell that property, and if you take the proceeds and buy another property via a 1031 exchange, then you don't have to pay capital gains on that. And you can a lot of people kind of use it as a way of leapfrogging up from one asset class to another. Is that fairly accurate there, Paul?
Yep. With some fairly simple rules of engagement that are many times misunderstood, but it is by no means as complicated or scary as a lot of people make it out to be. We've literally done hundreds and hundreds of them over the years.
So you've got a lot of experience in this. People do it right, people do it wrong. What are some of the bigger mistakes you see people making when they are doing 1031 exchanges?
One of the most common mistakes that I run into, even with CPAs and attorneys, is the term like kind. Mm-hmm. You'll oftentimes hear people say, well, I've got this pool of single family rentals, or I have multifamily, and I need to sell it like kind and buy the same type of property. That will dissuade them from taking any action down that path. Whereas, as you said, you can sell any type of investment property and move into any type of investment property. But that one piece of the puzzle is probably the most misunderstood.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com. Yeah, so people, so for example, let's say I've got a fourplex that I've had for the last 15 years and I'm ready to sell this sucker and I've it's gone up in value, I've paid off the mortgage, whatever. And I want to do something different, but a lot of people think, well, if I've got the fourplex and I can use this 1031 exchange it into an eightplex, but you're saying, hey, it doesn't even have to be multifamily. Like kind doesn't mean that. So what could I do instead?
Yeah, our perfect avatar is single family rental owners, multiple units or multifamily that they've held the property for a considerable time. They've achieved appreciation. They have low or no debt. When you look at the actual 3 or 5 year running average on those properties, when you take into account evictions and repairs and all of the difficulties in managing those properties, that return, despite what they think, is usually dismal. We oftentimes see 2% or
Oof.
less returns. And what we do is sell those properties or property and move them by 1031, say into a 25-year Chick-fil-A lease, where it stabilizes their income and they get what we call a coupon clipper. So ACH of the income every month without any phone calls or anything.
Well, give me an example from your own experience, if you would, Paul. Leave names out if you would, but maybe walk me through a story of a client that just kind of pops into your mind, either single family home or multifamily, and what exactly they did with you with this whole 1031 exchange idea.
Yeah, I got three off the top of my head. One, this family in Redwood City, California, had an apartment complex, held it for a long time. It
How
was
how how big? How many units? Just to give us an
that
idea.
one was only, I believe, 8 units or so, 8 or 10 units.
But again, it's in California, so it's worth a schwack. I'm
Yeah,
assuming.
and Redwood City, which is peninsula south of San Francisco, it
Mhm.
was worth some money. But it was physically and mentally and emotionally killing the people that owned it. They were
Yeah,
in their 80s.
self-managing. Yeah.
Yeah, it was awful. We came in, sold the property, and moved them into a Chick-fil-A ground lease in Nashville, Tennessee. And
So can you share how much you sold it for? Like how much was
I
give or
believe it
take?
was in the 6 million range.
Okay,
Something
so
like that.
that's what I was
Yeah,
thinking, 5 or 6 million. Okay,
yeah,
so they don't want to. If they didn't do this, they were going to pay goodness knows how much in capital gains tax on that 6 million. Right, that
yeah,
would have been huge.
yeah.
So tell me
So
what they did.
yeah,
What's it got to
and
be?
in fact, in that case, to digress just a bit, we
Yeah,
were fending off. The family brought me in to discuss it because the financial planner, they just generally want to manage dollars. So
yeah,
they were advocating sell, pay the tax. Government's going to take half the money essentially, and then I'll manage the 3 million that's left.
of course the financial planner wants that. That's
Yeah.
3 million more bucks to get their fees off of.
So
Yeah,
what I suggested was, hey, let's sit down and look at this. And then we did with the financial planner. And I said, tell me what's wrong with this idea. Sell this for 6 million, roll it into this long-term triple net. If they want to pull some cash out next year, they could go get a loan. And then you have money to manage. They have a property that's cash flowing, and the government hasn't gotten any money out of the event, which is somewhat rhetorical because the financial planner, there's not many holes to poke into that one. So in that case, we increased their monthly income by about $10,000 a month, and
wow.
their phone stopped ringing. Um, we had another one, Sharon, who had her husband had passed away. Oh gosh, I think 10 or 15 or 20 years ago. She had a bunch of houses that the residential broker brought me the roster with the lady, and she was also just beat up. She had 10 million in single family rentals, no debt, and they were basically a bit above break even.
Oh my
We
God.
sold
Wow.
5 million. We sold half of that pool, moved it into a 5 cap long-term triple net deal, and immediately created 250,000 a year in net income. So
Nice.
those are the types of. We have another one in LA. I think it's about a 30 unit complex, and increased their income by 58%, and again stopped all the problems and evictions and repairs.
So yeah, so they sold off their complex and they bought something else, triple net lease. So there's all sorts of different kinds of triple net lease properties out there. What's your favorite for these kind of situations, or do you have one?
I have a very strong feeling about that, because my background again is in development, and one of our
Mhm.
products that I've developed for decades is QSRs, or fast food drive-throughs. That product is getting more and more and more difficult to create across the country. It takes
Really? Why is that?
just the political climate. A lot of jurisdictions don't want drive-throughs.
Interesting.
Yeah. So it is what I refer to as an insurance policy. So let's juxtapose Chick-fil-A and O'Reilly's, or Advanced Auto Parts, and nothing wrong with any of those. But if you have an O'Reilly's and they're selling oil out of it, they could up and move down the street at the end of the lease and find a new box to sell oil filters out of. Whereas if you have a Chick-fil-A or a Chipotle, or you name it, that drive-through entitlement is very difficult to replicate. It will
Mm,
take years to get through the process wherever you are. So their ability to move is limited at best. And even when a concept gets tired, like some of the older, say, Long John
KFC.
Silver's or
Okay.
KFC, you will see, as long as there's the right demographics and the right traffic counts, you will see multiple offers looking to backfill those drive-throughs before they ever even hit the market, and usually substantially above what the previous rent was at. So to answer your
Interesting.
question, drive-throughs in the right spot are gold, in my opinion.
And I know this is going to be different all over the country, but give or take, if somebody wants to buy a drive-through like that, what are you looking at? What do you need to have to purchase one of those kind of properties?
Yeah, we've done deals for Seven Brews and some of the other coffee concepts, and ground leases in that arena down into the 900 or a million range, which is hard for me to even say that that's a lower range. Been in it so long, it still
Yeah.
sounds like a ton of money to me. But yeah, that low millions is kind of the where it gets a little more tricky when you're in, the upper ones to 2 to 7 or 8. You can find some very good assets out there.
Interesting. Very, very cool, Paul. Well, hey, thanks for kind of shining a light on that. I think we've
Absolutely.
we've unwrapped some really valuable stuff there about 1031 exchanges. First of all, just what the heck they are for folks that aren't familiar, and the mistakes people make thinking if they got single family homes, they can only exchange into more single family homes or small multis into bigger multis or what have you. You can completely change uh, the kind of real estate that you're investing in, as long as it's real estate. And then also thanks for kind of showing us some real examples there, the befores and the afters, and the difference that makes. And I really appreciate you kind of sharing your secret sauce there, which is the drive-through restaurant concept. It makes a ton of sense. I was not aware of it being such a challenge to build because we see them everywhere, so we assume it must be super easy. But no, it's getting tougher and tougher to make these things. So
Yeah.
appreciate that. So hey, Paul, if people are watching this and like to find out more about you or connect with you, where should they go?
My website is the best place to go. It is PDF, like the Adobe file, also like Paul Daniel Frank hyphen USA.com. So www.pdf hyphen USA.com.
We'll make sure that we've got that in the show notes as well. So hey, Paul, thanks for being on the show.
My pleasure. Appreciate you.
All right, everybody, thanks for tuning in. See you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.